Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com looks at the major markets. What kind of effect did President Trump's positive COVID test have for investors, silver, miners, and the crude market? Rick Ackerman, editor of the Rick's Picks Investment Letter, checks in on the U.S. election, the U.S. and Canadian dollars, junior miners, and people fleeing U.S. cities for friendlier tax environments. Hilliard MacBeth, author of the second edition of When the Bubble Burst, Surviving the Canadian Real Estate Crash, looks at how the recession is affecting real estate, the oil patch, the end of deferred mortgages, and other government programs designed to help the economy. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at Charts by Ross. Welcome back to the show, Ross.
Nice to be back after a one-week hiatus.
Ross, positive COVID test for President Trump. Did that harm the markets?
Well, it's woke up to that on Friday morning, and I think back to in history when you have events such as this that become a question in terms of the health of the president. We had the two that really come to mind here. One was the Eisenhower back in 1955. That was a heart attack. And markets gapped down, stayed down for another week or two, but then came back to all-time highs again. You had the same thing with the Kennedy assassination in 1963. And for all that I wasn't trading in those days, I do recall that very distinctly. And the market literally was down for one day and then reasserted its trend. So truly, for all that we think that the president is the one who determines all that's going on, fact is, governments will run independent of who's in number one in power. And in this case, we had the bad hit overnight. Dow was down over 400 or 500 points and bounced back pretty darn well. A week ago, we had one of our capitulation buy signals in a rising trend. That was on the Thursday, the 24th. And when you've got those kind of conditions where you're oversold in strong uptrends, you typically get very, very sharp rallies out of that. And we saw that, the options, the at-the-money options in the last week rallied, depending upon the strike price you had, anywhere between 80 and 120% by Friday through the middle of the week. So, we tend to be opportunists. We look for things that are creating excesses and then look to take the trade as markets make that turn. So the S&P and the NASDAQ futures both generated those kind of signals on Thursday and had a pretty darn good week on the upside. At this point, we've had 50% retracement rallies of the decline from the early September high. And, we see this at least I see this as a consolidation phase. If it can't get up and go from here and starts to work towards those lows of 10 days ago, takes those out, then you're looking for the classic seasonal bottom towards the end of October into November. So, got our mind still set to being very cautious in here on the short term.
Ross, what was going on with precious metals?
Well, precious metals, on Monday, we got most of the pieces that we look for to set up a precious metals rally. We had that big top back at the end of August. Upside exhaustions in silver in particular, and gold was lesser signals, but it was there. And the classic move out of that is you have two waves of selling. The first to the 20-day moving average, the second to the 50, and usually then penetrates that. That whole process takes usually about 30 to 34 trading days. In this case, it took 32 days to put in the low. And as of Monday of this week, we had a sequential signal as far as gold, the silver, and the GDX. Those are buy signals. The RSI, the Relative Strength Index, had been down to 18. And out of the models that we have, the similar ones, and we've got 5 of them here in the last 50 years that match this one, an RSI like that was just an exceptional reading. And our own summation index was the first oversold buy signal since the March low. So the probability here is that the metals work their way higher over the next 2 to 6 months. Probably, you're going to get the greatest volatility in silver. But the bias as far as gold is concerned should be to the upside. And typically, you want to be letting the market make runs like it has right now. It's up and testing the 1910, 1920 resistance level. But you want to be looking to buy 50% corrections of any of these minor rallies. So you get anywhere from maybe a 1 to 2 week rally, and then look for it to settle back. Buy that 50% correction for the next leg up. I think gold will do the best. Miners probably second, and silver is clearly going to be one for either very long-term buy and hold or very short-term traders. So, quite an environment coming up here, I think, for the next month or two.
The Canadian dollar usually depends on what's happening with the price of crude. Will the loonie be going up and down according to what's happened to the crude market now?
Yeah, we sort of got this mix here. We've got crude oil, which had a decent bounce. I mean, we got down to 36.5, and we were looking for a 10 to 15% bounce out of there because it got oversold. So it got up to 41.5. That was a 13% rally off the lows. Back down now into 37.25. So under pressure. The oil stocks, if you take a look at like the XLE or the XOP, the ETFs, they are now into a position where they are prone to have a pretty good bounce. But this is still all within the seasonal downtrend. So I think you look for these short-lived rallies as opportunities to be sellers. And as we get through October to November, really start to look for some tax loss selling opportunities. So if we get some capitulation lows in various oil stocks, and I don't think we're going to have to go to the real juniors these days, because my concern there would be what's the viability that they will continue to stay in business. But even the big names, the Suncors, the Exxons, these names are coming under quite a bit of pressure, and if they only get minor bounces and start back down again, those are the kind of names. If we see capitulation in them, that becomes a great turnaround situation to take us into the beginning of next year. So, kind of I'm frothing at the lips here to see what comes about in the energy complex.
And Ross, before we go, you have a special offer for our listeners?
Yes, this time of year we like to present the opportunity for people to come on board, especially as we're looking for some potential really big opportunities in this calendar quarter. So we're offering 25% off the annual subscription, and that's good through Columbus Day in the U.S. or Thanksgiving as far as the Canadians are concerned. And we'd love to have you come on board. So chartsandmarkets.com, and you'll see the link there on the homepage.
Ross, thank you so much for being on This Week in Money.
Always a pleasure to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter as well at ChartsByRoss. Coming up, Rick Ackerman next on This Week in Money.
Always consult your investment professional before making any investment decision.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Rick Ackerman, editor of Rick's Picks, available online at rickackerman.com. He's speaking to us from the Jersey Shore. Rick, welcome back to This Week in Money.
Thanks for inviting me on, Jim. It's always a pleasure to get together with you.
Rick, what's the latest at Rick's Picks, and how can people subscribe to your service?
Well, we've got a great deal. Go to rickackerman.com, and up toward the top of the page, there's Start Trial. You just click on that. For $1, you get 2 weeks of everything. You get the best chat room on planet Earth. You get accurate, correct forecasts from popularly traded vehicles every day, invitations to special online sessions that I have now and again, what I call request sessions, and a whole bunch of goodies. So again, that's rickackerman.com. Just click Start Trial at the top.
How do the U.S. stock markets look?
They look rabid. They look psychotic. They look exuberant. All three of those things. I wouldn't call that a picture of health, even though in a political sense, I guess it's everybody looks at it as healthy, that markets are somehow signaling a revival of an economy that you and I know has not really revived and probably won't.
Could the stock markets be predicting the November 3rd election?
Absolutely. You look at the stock market and you can see that it has no doubt that Trump's going to win the election. If there were just an inkling of anxiety that Biden might actually pull it out, the Dow would be 10,000 points lower, or let's say certainly 5,000 points lower. Because as we know, it's not really Biden who's going to be in the White House making the decisions. It's all the people who are fixing to shove him around in the unlikely event that he gets elected.
What do you see ahead for the U.S. dollar, short and long term?
Well, the dollar is a very important thing. We talk about it we've talked about it in each of our interviews, and it just came off a long-term trend line at 91.75 about a month ago. That's the dollar index, and in this rally, it's traded as high as 94.74. That's a 3-point rally, a little more than about 3.5%, and that's a good start. I think it's inconclusive yet as to whether the dollar is about to embark on a major move. But if it does go higher and continues to move up toward 100 and above, I think everything else, every other trend that we've seen since March is an absolute dead duck. Stocks are going to fall. Gold and silver will come under quite a bit of pressure. And although I think they're still going to do okay, and anything that the Fed says about stimulus is going to fall flat. A strong dollar is going to give the lie to this whole effort by the charlatans that run the central bank that they're really not in control. And even though Powell has talked about targeting inflation at 2%, as I made clear in an earlier interview, that the Fed is praying they can generate 2% inflation, but I'm saying they can't. They won't be able to do that.
What do you see ahead for the Canadian dollar, short and long term?
Well, the loonies had a pretty good rally since March. It hit a low of about 68 U.S. cents back then, and but the rally currently to about 75 is yet to exceed any prior peaks on the weekly chart. It would actually need to get to above 84 to end the bear market relative to the dollar that began in 2007. The Canadian dollar was at an all-time high then of around $1.10. looking alternatively at bearish possibilities. If the loonie continues its long-term downtrend, I could see it going to 64 U.S. cents or maybe even to 57 cents, worst case.
Gold has been pulling back from new all-time highs. Is gold likely to see further new highs this year?
I think it's pretty much spent for this year. We had a high up around 2,100 and something for the COMEX gold futures, and we're currently down around 1,900, and where are we trading at this moment? 1901. So it's come off a couple $100, and I think gold needs a little more consolidation before it's ready for a big run-up, but I don't think that will occur until 2021, assuming it does occur.
Silver has pulled back after trading around $30 an ounce. Do you think silver has seen its high for the year?
Yeah, I think it's not going to produce any miracles in a vacuum. It does take its cue from gold, or sometimes the opposite, but I think that silver, like gold, has seen its highs for this year.
How do the mining and junior mining stocks look?
Well, they look better than physical bullion, actually. I hesitate to say it's because they've been beaten down so hard, because some investors out there might construe that as meaning that because they've been savaged so often in the past, that they're less likely to get pummeled in the future. But like gold itself, they look like they could use a rest. But I think that the big move off the lows, the giant moves that have taken place in gold and silver, are what I call impulsive moves. In other words, we're going to get whatever weakness we see from here is going to be corrective, but it could be a pretty substantial correction, so I would be careful about that.
Is the gold-silver ratio a good indicator of where silver is headed?
Yes, it always has been. It at least gives you a sense of how much room there is for silver to outperform gold, going up and and coming down as well. The ratio is around 80 right now, so there's pretty good room for silver to rally to outperform gold. We saw a high in ratio in April of 114 and change, just about 115, and the technical target that I put out was 113, and that would have been that's the culmination of a pretty big ABCD pattern, which is what I use to do these projections. So you could say then, or you can infer, that the 114 price was that was it for a while. I think that's the highest we're going to see the gold-silver ratio for a long, long time. So if the current 80 ratio corrects to the midpoint of the rally that occurred from a low that occurred back in 2011 to that recent high that I just mentioned, it would cause the ratio to fall to around 73, of course, to the benefit of silver investors. In fact, I think I'm going to give you 73 as a minimum target for the ratio. So there is right now, even in a downtrend, a chance for silver prices to expand relative to gold.
Bonds and interest rates, what do you see ahead?
There's still some room for lower rates, but obviously not much. The smartest guy I know, certainly the smartest investor, is a fellow who manages money in Boulder, and I think pretty much anyone who's got 8 or 9 figure net worth has an account with him. He's just done really well for them over the last 40 years, and the secret really is that he's been just long bonds that entire time. He's basically mastered fixed incomes. That's where they made all their money. And of course, in a good year, when the interest rates are dropping pretty sharply, you can see capital gains on all bond-related vehicles of 20 to 30%. So he's great. He's done great for them, but he's moving out of them now. He just sees limited appreciation potential. I wouldn't say I differ with him. But I do see yields as possibly coming down lower. I think that bonds are going to pick up a bit more of a bid from flight to safety when the psychosis in the stock market comes to a horrible end.
What do you see ahead for crude oil?
Oh, let me mention also. Let me mention also that well, actually, that this sort of ties in with that. Crude oil, I think, is going to continue to suck. The producers need $45 a barrel, $50 a barrel, just to break even, and they're supporting too much infrastructure right now on a losing business, and you can only support the rigs for a certain amount of time if you're taking a loss. And I think that a lot of energy producers are going to pack it in. We're going to see a lot of failures, and I don't think all the jawboning in the world and all the talk about curtailing supply is going to push crude up above the threshold where these producers become marginal producers become profitable. And it's not just producers at the margin. It's some of the biggest companies in the world. They're struggling to make money with crude, and all the talk and even implicit support from Fed easy credit is not going to push demand to where it needs to be to keep oil afloat.
Are the agriculture markets predicting food shortages?
The rise in crop prices since the lows in 2016 has been pretty subdued. Wheat currently around $5.73 a bushel, up from the low in 2016 of $3.60 a bushel. But it would take a pop exceeding $6.16 to signal, at least the way I read charts, significant price pressures ahead. Corn prices are relatively depressed. It's currently around $3.70 a bushel, and that's off a high in 2012 of about $8.44 a bushel. But from the current $3.77, I think we need very substantial rally, $1.50 really, to above $5.23 a bushel to signal the end of the bear market in corn.
Real estate sales and prices have bumped higher. Is this due to extremely low mortgage rates?
Well, there's certainly a factor. When people get this idea that they can't lose 2%, they can buy a heck of a lot more than they can afford. It certainly has an effect on the markets. One cautionary note for those who didn't learn their lesson in 2007 and 8 is that no matter how low your mortgage is, it can be 0%, you're still going to get crushed if the value of your home is falling by 10% a year, which is what I expect. I think the other shoe is yet to drop in the housing market, but when it does, all these mortgages being done at historically low, record-breaking low rates are not going to seem so friendly. So that's a caution. But yes, for now, there is quite a flow of money into suburban real estate, and ordinarily when something goes crazy, like even in this little resort where I'm staying, the beachfront lots are $4 to $5 million, and you put anything on the market here. This is Margate, Ventnor, Longport, New Jersey, and you can sell it instantly. And the prices were already pretty pumped up. So I think that's really a long-term trend, or it's certainly going to continue for the foreseeable future. Here, it's a lot of rich Philadelphians and New Yorkers just waving fistfuls of money at anybody who's got a home, particularly a beachfront lot. But so the premium properties are really exploding in price, and I think that you have concurrent support at lower price levels, just in this exodus for the suburbs. It's going to continue because the cities are going to get worse rather than better. The tax base for the big cities is absolutely collapsing, so there's going to be reduced services, and people like de Blasio and what's-her-face from Chicago, they're going to be looking to tax the rich who, well, if you've been reading the headlines, you know the rich are all fleeing to Florida and other places that don't have income taxes. So that's not, it's not a passing fad. I think that the exodus to the suburbs is going to continue to be very supportive of housing prices.
We'll have more with Rick Ackerman when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Rick Ackerman. Yep. What about all these people who bought condos hoping to rent them out through Airbnb to foreign visitors?
Well, that business is going to be dead until we get an effective vaccine. I think I can say, having I traveled from Florida to New Jersey, stayed at a couple hotels, and they all look like they've been surgically scrubbed. You know, they're all everything looks pretty clean. But with the Airbnb market, you never know what you're going to get, and even if some place is highly rated, you still don't know whether it's antiseptic as well. So those businesses are going to continue to hurt.
Small business, is it doomed, or is it going to come back, but it'll take several years?
Well, you can look around you and see which businesses are still able to do business, and it's really easy if you base your investments on that. I don't think you can go too far wrong. The only problem is that the stocks that correspond to those still flourishing businesses have been bid up to the sky. But a lot of small businesses are really going to get crushed, and you're going to see the restaurant business practically vanish in New York. This winter is going to be a very tough one on the restaurants in particular, and a lot of them have just been hanging on. I understand that you can't really get a space heater right now, and tent with flaps. The cellars are sold out. So the restaurants are really struggling, and they're just really coming down to their last days, really, where they can remain open with the outdoor seating. So in latitudes where it gets cold in the winter, it's going to be an awful winter for those businesses. And we're also seeing a number of small businesses come off the dole now. They're not getting payroll protection loans and things like that, and I don't even know that a second stimulus package is what we need, really. It seems to, as cruel as this might sound, it's just a misallocation of capital to support businesses that can't possibly make it. Looking at somewhat larger businesses, I have a friend who buys and sells big businesses, and one of the businesses that he sells, it's basically a service business. The private equity sharks come in and they look to buy these businesses for about 7 times earnings. And if you're trying to sell one of these businesses, you want to get about 12 times earnings. My friend just got around 12 and for a sale, and really cleaned up. But he also took possession of one of these businesses, and it was based on a calculation. You've really got to make some estimate if you're doing business at that level. And, when you're laying out $10, $20, $30 million or more, so you have to say, well, how bad is it going to be? And how bad it's going to be answer is 2.5 years. So right now the business is not dead, but it's certainly moribund. It's doing, revenues of about 30% of peak. So he's basically made an assumption that in 2.5 years, everything will be back to normal in this business or close to it. And you can judge for yourself whether that's optimistic or pessimistic. We'll have to see how some of the early vaccine stories look.
States like Florida and Tennessee are opening up following the COVID scare. Is this likely to be more bullish for the stock markets or the U.S. dollar?
Not even slightly. I don't even think you get an angstrom of movement in the markets based on Florida and Tennessee. But that's not to say that there's not intense curiosity, really, over how things are going to play out in Florida. Florida's basically said, okay, we're just open for business. And so far, it looks like any place that's taken that path has experienced an upswing in the virus. Just incidentally, I mentioned that the big news on Trump and Melania having the virus is the stock market's reaction is really interesting. The stock market is so full of itself. It's so full of arrogance and hubris and the certitude that all this Fed money is just going to keep pumping stocks higher, that it took the news, which could be obviously very, very, very significant if heaven help us, the president develops serious symptoms. But for right now, the market said, ha ha, we can slap the market around any way we please. We'll manipulate it today the same way that we do every day, except in a bigger way. So we saw the market down. The Dow was off, I think, 500 points or so in pre-market. The index futures were off the equivalent of 500 Dow points. And then they brought it back. The Dow's off $16, $18 now. And they ran it back up so hard, so fast, that any trader could have seen that even with the thieves and dirtbags that work the markets in full control, they weren't going to get it up much more than they did. But they're trying, and it's really spook short. So you have some good push right now coming from short covering. But there's no question that even the sleazeballs who were so good at working these markets, they've sort of overplayed their hand today. But for now, in the absence of any serious symptoms in the president, the powers that be are they're screwing around with the market like, who cares? Ha ha, we'll just make hay while the sun shines.
Is it a warning sign when a major stock like an Amazon or Tesla splits? Is that about to tell you the price is going to plummet?
No, the opposite's true. It's telling you that the same sleazeballs I was just talking about, the big money, they're looking to get out. And when you have Apple trading at $500 a share, or Tesla at $2,000 a share, it's not like you can unload all that stock on the Robinhood guys, who are in their parents' basements trading with money they borrowed from their friends or whatever. So what you do, the reason they split those stocks was when you get Apple down to 100, then yes, some of the Robinhood guys can start buying a few shares here and there. And if the luck holds out for the sleazeballs, they'll have a whole year really to distribute stock. Who knows? They're counting on if Apple has a valuation of $2 trillion, which is absolutely absurd considering what they make most of it. Most of the revenues come from the selling hugely overpriced hardware, phones. But if they get a year, they can unload, who knows, $400, $500, $600, $700 million of that grotesque overvaluation. So the same thing's happening with Tesla, although I think the story in Tesla is much better than Apple. Apple is no longer capable of innovation, but with Tesla, it's a little bit different. Tesla's capable of breakthroughs in battery storage and things like that, and they're obviously selling a lot of cars. So Tesla's move has been, I think, more justified than Apple's, if you could speak of either as being justified. But in any case, watch your wallet when they split stocks, because all that means is the big guys are looking for a lower price basis to unload on the rubes.
What sectors do you like going forward?
Not many. As we were talking about earlier, any idiot can look around and it's pretty clear which businesses are going to flourish now and which are going to fail. But as I said, unfortunately, any company and any business that's on the winning side has been so hugely overbought at this point that you're just I'm not going to say you're you're flushing money down the toilet, because it's true that you can't see a logical end to it. That there will be, but it's just not something that's easily within the grasp of one's imagination. But in the meantime, the theme of just throwing stocks that happen to be winners, one of the things that's supportive of a company like Apple up to ridiculous levels of valuation is just the kind of autopilot buying that's being done, because anybody that throws money at Vanguard, I think, takes in $1 billion a day, and they deploy that in a trade-weighted manner, meaning that Apple gets the lion's share of that billion. So, and we've discussed also the Swiss Central Bank is a buyer of Apple shares because they're selling francs to buy Apple shares based on the mistaken demand for Swiss francs, the idea that the Swiss franc is like gold. So some of these stocks really have perpetual motion, cold fusion power, and I can't really imagine how it's going to end. I can only tell you that it will. So, as far as sectors going forward, one place I mentioned a buddy of mine who has a lot of sizable accounts in Boulder. He's moving money out of bonds right now into some of the bonds that are associated with the oil pipeline business, and some of these companies got hit so badly since March that they're very depressed, and because they trade as bonds, the price is equivalent to a yield, and in some of these pipeline plays, you're getting a yield of 12 to 15%, and with some of the tax selling we're seeing year end here, you're going to be on the high side of those yields. So you're a 15% yield is nothing to sneeze at. But otherwise, I think you're taking your chances when you sort of go with the flow into all these stocks that have gone bananas.
Do you see a fall correction happening, or is the Fed pumping in so much money that a major drop is impossible or unlikely?
I hate to say it, but I mean, I'm always thinking the glass is half full of hemlock, and the sky is falling and all that. But I really do lack the imagination to see what is going to derail this perpetual motion machine. There will be something, and I think it'll be the exogenous shock of some piece of news that nobody is equipped to handle, that the market surely will not have discounted. So I'm done being a timer, or at least saying it's all going to end. We've had so many gurus wind up on the rocks there with their some of the Hindenburg omens and all the other things that say the market's going down. Any cyclical indicator is trash at this point, and the market is just making fools out of people who think that the past is somehow going to instruct them as to what's going to happen in these crazy times. So, all right, that's a long answer, but the short answer is I can't see a top. I mean, there will be one, but I'm not out there straining to predict exactly when it'll be.
Are these millennials trading Robinhood and other no-fee stock platforms? Are they in for a rude awakening if there is a correction now?
Well, I don't think a rude awakening in the way of some shock. I think that the awakening is kind of a process that by now 99% of the Robinhood traders will have discovered that they're not making money. You know, in a way, it's sort of like driving an Uber car and thinking you take in, hey, $400 today, but you neglect to depreciate that amount by your car's depreciation, and so on and so forth. So I think the Robinhood guys, they're probably at the stage now where this is a place where all novice traders get to, and that is if they're pretty good. What they're saying is, if I had my commissions back, I'd actually be making money. And these yo-yos actually think that small increment, let's say they paid $5,000 in commissions last year, and they wound up down on the year for $5,000. Well, that's a carnival midway play, really. It looks easy. Anybody can knock the milk cartons over with 3 balls. But as you know, when you get to that last milk carton, even a Category 5 hurricane couldn't take it out. So you got the Robin Hooders, I say all, but I'm just thinking more a preponderance of them are thinking, hell, this game ain't so hard. I'm getting better at it. And if I had my commissions back, I actually would have made money last year. The unfortunate fact is that at the margin, the difference between being able to lose a little bit on average every day or week or month or year and being able to make money on average, it looks like a small step, but it's huge. It's that carnival midway trick. It looks easy. So that would be my advice to the Robin Hooders. If you're almost profitable, you got a long way to go before you can count on a steady flow of income.
What does it say about the economy? A friend of mine said they ordered $10 worth of McDonald's and it was delivered by somebody driving a Mercedes.
Yeah, I wonder about that myself. Not only as to the price of the burger and how much business you can do in that way, I don't know. I was surprised to see when they showed the part of the George Floyd video that was not released initially. I think one of the London tabloids broke loose with it, but it showed that George Floyd was driving a Mercedes himself. So I don't know what that says. I guess these days anybody can own a Mercedes if it's important enough to you. So let's just say that in this case, that the McDonald's delivery, either the person who is making the delivery has fallen on hard times, and he's just trying to make monthly payments on his Mercedes. But you can pretty much assume he's not making much money on those deliveries.
Or maybe mom and dad bought the car for him as a graduation gift.
Yeah, but then the question is, why is he working at all? And I don't know that even mom and dad these days aren't buying the story that when their son's out delivering for McDonald's, he's somehow cutting it.
Where can people find out more about Rick's picks?
Well, just go to rickackerman.com and have a look around. As I mentioned earlier, the start trial thing, the button at the top will get you a 2-week subscription, all features, all services for just $1. So be sure to say hello if you get in the I have two chat rooms. One I call the trading room, where it's geared to very specific, timely trading ideas, and the other is called the coffee house, where as far as discussion, anything goes. So again, that's rickackerman.com, and just take start trial.
Rick, thank you so much for being on This Week in Money.
Well, thank you very much for inviting me on, Jim. It is always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He was speaking to us from the Jersey Shore. Coming up, Hilliard MacBeth next on This Week in Money.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMY.Resources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to This Week in Money, Hilliard.
It's always a pleasure to be on the show.
Hilliard, how is the second edition of the book selling?
Well, I think it's selling pretty steadily. You know, I don't get frequent reports, but I see that it's still in all the bookstores. They're keeping 1 or 2 copies on hand, and I also get lots of contacts through Twitter and email of people that say they're reading the book and they want to ask questions, and I welcome people to contact me that way. So it's still of interest because obviously the housing bubble is still with us, and the question of, how much of a correction are we going to get, and is it going to be a crash is still very top of mind for people.
What happened to the real estate market during the summer, and is it continuing now?
So the big thing that's happened, well, several big things. One of the biggest things is of course, the COVID-19 recession and the COVID-19 health scare, which allegedly anyway has created a huge surge in demand for single-family homes, especially outside of the downtown core in the big cities like Toronto and Vancouver, and a desire to get out of high-rise towers and condos. So the condo listings for sale in Toronto, I don't have the numbers for Vancouver, but in Toronto, they're basically 6 or 7 year record highs in terms of the number of listings for sale. And the listings for rent are at record high levels. There's over 10,000 condos listed for rent in Toronto, and over 6,000 condos listed for sale. And those are both record high numbers. Now, there are very few sales going on, and it's very hard to find a tenant. So, but in the single-family home segment, sales are very brisk. Listings are very big as well. Lots of listings, but also lots of sales. At least it appears there's lots of sales, but that's, there's questions of whether those sales are actually bona fide, but there's stories of multiple bidders for properties, that sort of thing.
Could buoyant stock markets have led to the high-end buying we've seen recently in Vancouver?
It's possible that generally most of the Canadian stock market companies that people would own in Canada have not been doing that well. The banks, the biggest ownership of Canadians are Canadian banks, and those companies are up a little bit over the last 5 years, but it's pretty modest. And my experience is people that own Canadian banks don't want to sell them anyway. The few people in Canada that own a lot of stocks like Tesla or Amazon or Apple obviously would have money. I had one client who sold his Apple the other day, and he actually got quite lucky. It was about a month or two ago, and he got pretty close to the high price, and he had a gain of $400,000, but that's quite rare. So I don't think that would be enough to really make the housing market strong. I think it's more likely to be the availability of really, really cheap financing.
Have low mortgage rates created a great opportunity to refinance mortgages and other debt?
Well, the thing on refinancing in Canada is different from the U.S. The U.S., the mortgages are 30-year, and the interest rate is guaranteed for 30 years as well, and you can refinance and take a lot of money out. In Canada, if you try to, so for instance, the latest numbers, it's almost incredible to say this, but they're talking 1.65% interest for a 5-year mortgage. And so if somebody was sitting at the 3% mortgage or a 4% mortgage, and they've got 2 years left on their 5-year term, they might be tempted to try and refinance. But the problem is that there's a penalty, and the penalty can be as much as the difference between 3 or 4% and 1.65%. So you're no further ahead. So other than the fact that you would extend that 1.64, I guess if you're renewed early. But you still have to pay out the remainder of the interest owed at the higher rate. So I'm not sure how much of that happens in Canada, but that's not, I don't think that's as big a deal as people make it out. I think people generally, they're going to see if they can buy a new place. And the hot new thing now is single family. And when they go and find out it's 1.65%, they qualify for a lot bigger purchase price. So they're pretty happy about that.
Have banks become more liberal in their lending?
Well, they can't possibly be more liberal than they were for the last 10 years. What shocks me is, and I don't know, it's hard to tell, because the banks are different, and even down to individual loan officers would be different as well. But I'm surprised that they haven't tightened up more. They've obviously, in Alberta, they've tightened up a lot, but still, I was just talking to somebody last week who said that they got approved to buy a single-family home. They're trying to do what everybody's trying to do, sell the condo and move out and go to a place with a yard and some space. And they got approval to buy the new place before they sold the old place. They hadn't even listed it for sale, and the bank said, "Oh, that's no problem. We'll just count the equity you have in the condo towards the purchase of the new house and carry on." With the uncertainty about jobs and the recession, a very severe recession that we're in, I'm surprised that the banks would be willing to do that, but apparently they are.
What do you see ahead for mortgage rates?
Well, they can't go any lower, I don't think so. So they either will stay this low forever or they'll go up. These are the only two possibilities. We do have some precedents, though. In Japan, mortgage rates stayed really low for 20 years, 25 years, from 1989 to, and I guess they're still low today, actually. So we're looking at 30 years they've stayed low. So it is possible for rates to stay this low for a long, long time. Have
mortgage deferrals ended?
Mortgage deferrals were for a maximum of 6 months, and almost all of the deferrals were taken out when COVID, the lockdown, happened in March. So that would indicate mid-September to late September. So starting right now, October 2nd, we're going to see most of the mortgage deferrals end in the next 30 days, and it's a huge amount. And the number of deferrals is roughly, on average, 12% of all the people that have mortgages in Canada, which seems like a high number to me. In some provinces, Alberta, Saskatchewan, and Newfoundland, the deferrals are much higher. In Alberta, it's the highest at 21% deferred. And, of course, the common denominator of those three provinces is the oil and gas industry.
We're hearing real estate is a seller's market. Is there pent-up selling demand that could quickly turn real estate into a buyer's market?
Great question. It's actually happening already. So, for instance, Vancouver, the demand for single-family homes is very high, but the listings for single-family homes are also at a record high right now. So, the sellers are responding to the demand. They're offering their homes for sale. And if the COVID recession lasts much longer, there's a lot of people that will become desperate to get out of their properties because if they lose their job, they won't be able to afford the mortgage payments. So I expect that we'll see more and more places listed for as long as the sale price holds up. And even when the sale prices start to go down, people will probably list anyway. In fact, that's something, I don't know if it works in the housing market as much, but it certainly works in the stock market. When prices start to drop, sellers would be, should take note of the fact that sometimes that's a great time to sell because there's a whole bunch of people out there that look at a bargain. They're always looking for bargains, and they say, "Oh, gee, look at that stock. It was $100. Now it's only $70. I'm going to grab some because it's got to be a bargain, having dropped 30%." So certainly, I expect that the listings will continue to build, and then we'll see if the demand holds up. I suspect this summer demand fling that we've had has been primarily related to the low interest rates and also the unprecedented amount of government money that's been given out to people. And so that probably, the low interest rates might last, but the availability of government money is going to shrink, and therefore the demand may shrink as well.
In your book, When the Bubble Bursts, do you look at times like this with high unemployment and low mortgage rates?
Yes, so there's a good example. I've got a chapter in there on Japan, and it's exactly what happened. There was a long, as mentioned, there was a long period of low interest rates in Japan, and the housing prices just kept coming down. It didn't really have any impact. When people lose that speculative urge, especially if the real estate market is based on speculation as much as investment, as it was in 1989 in Japan. Once they lose that urge to speculate, it doesn't matter what the interest rate is. The interest rate could be zero, and if people don't want to speculate, they won't. And so they start to sit on their hands, and they don't jump in, even if prices come down. So prices in Japan, depending on how you measure it, are down 50 to 80% over the last 30 years, and there never has been a huge resurgence in the demand for housing as a speculation. And so I don't know if that'll happen in Canada, but certainly it is possible for interest rates to stay low and housing demand to also stay low.
Yes, of course, in Japan, it's not a growing population like Canada. In Japan, they sell more adult diapers than they do baby diapers.
The population growth myth that everybody has about Canada, it can be debunked in so many different ways. And one of them, well, first of all, the recent results just came out this week, and there was no population growth. So primarily the population growth has been significant due to immigration more than births and deaths. And in the last, because of the COVID-19 situation, the immigration has dried up. But the other way, so in other words, I haven't seen any reports from Toronto real estate bulls explaining how the real estate market's going to keep going without the immigration yet. But that was their sort of the one factor they relied on a lot in the last 2 or 3 years. But the other way to look at it, of course, is to look at Edmonton and Calgary, where the population growth was much, much higher than Toronto for many, many years, probably a decade or longer, at over 2%. Toronto never got over 2%, and Edmonton and Calgary both were like 2.35, 2.45% per year for several years. And yet the house prices have been weak in Edmonton's case, for more than 13 years, and in Calgary's case, more than 6 years. So it is possible to have a weak housing market with strong population growth.
When are we likely to see a bottoming process in the price of homes, especially in Vancouver?
Well, if people, generally the thesis of my book was that there has to be a connection between incomes and the house prices. And of course, you've got money laundering, money coming in from China, you've got speculation, you got all those factors that may not be related to income, but once the sort of all the noise kind of dies down, it's basically what can people afford, and especially that first time buyer. So income growth has not been great in Vancouver. Income is already low in Vancouver compared to other provinces, and so the house prices being as high as they are, it's something, the ratio is something like 14 times in Vancouver. It's one of the highest. It's in the top 3 in the whole world. Toronto is like 8 or 9 times, which is in the top 10 in the world. And eventually it comes down to earth. I mean, people need jobs to pay the mortgage. Almost all housing is paid off by people making the mortgage payments and eventually paying down the mortgage, and that's been the tradition. There's been a few years now we've had where it's gotten away from that, but in the long run it'll come back to that. So if the income's not there and the jobs aren't there, then the house prices have to come down. And unless people find, maybe in the high-tech area or something like that, Vancouver is certainly attractive to people in the high-tech area. And if they come in with high-paid jobs, then you could keep the house prices high, but they're so much higher than the incomes. I think that it's inevitable they have to come down.
How important is it for Canada, Canadian provinces, and cities to end all the lockdowns?
Well, with the second wave of COVID, it's interesting. About a week ago, we had the speech from the throne, and the Prime Minister Trudeau said that it was a second wave of COVID, and I hadn't heard anybody else call it a second wave up until that moment, and nobody famous anyway. And then just on Thursday of this week or Friday of this week, we found out that President Trump and his wife have COVID, and several other senior government people in the U.S. So it probably isn't time to end the lockdown. In fact, in Montreal, I was just talking to somebody whose niece has a restaurant in Montreal. She had struggled to open her restaurant, keep it open all summer at like half, with a patio at half capacity, and now they've gone back down into lockdown again for restaurants in Montreal, and they're threatening to do that in Toronto as well. So New York is just opening up restaurants because they had a horrible experience early on in New York, but now lately it's been better at 25% of capacity. So, and of course the big thing in the last month has been the return to school. and there's a lot of testing going on because every kid that has a sniffle or a cough has to be tested. So I don't think it's going to be that easy to end the lockdown anytime soon, and the areas that did end the lockdown seem to be going back into lockdown.
Prime Minister Trudeau has extended CERB payments through the summer of 2021. Is this move likely to have any effect on real estate or the economy?
Well, so that's a great question. The question's a little bit incorrect in that the CERB payments are ending in October of this year, and they're going to be changed to the employment insurance, the EI system. So, and there's some differences. Originally, they were going to cut it back from 500 a week to 400, and then they to get the NDP on side, they kept it at 500. But EI is different from pretty much everybody qualified for CERB, but now the EI requirement's a little bit tougher. So about 25% of the people that had been on CERB are maybe even a little bit more than 25% are going to not find any new equivalent under the new programs. About half the people are going to go straight from CERB over to EI, roughly. So there's about 4 million at the peak on something, and now there's going to be an additional 2 million on EI. And they've changed I won't go into the details, but it's complicated, but they changed the rules for EI a little bit. So, but the other thing is, this seems like a small thing, but it's actually pretty big. They weren't withholding any income tax for CERB payments, but under EI there is income tax withheld at source. So the average check, which used to be $500 unimpaired by withholding, is going down to about $350 to $360 after the withholding. So it's going to have a dramatic impact on the amount of money that people have in their bank account. And then combined with that, for the people that own homes and have mortgages, the mortgage deferral is ending. So people are going to be required to go back to full mortgage payments. So, the average mortgage payments, what is it, $1,500 a month or something? That's a big change. So people had this period for about 6 months where they were getting this money, plus they didn't have to pay their mortgages. They were deferred. They had quite a bit of extra money. And now with the fall coming and the winter looming, it's going to be much tougher. And, the other thing too about the mortgage deferrals is, they're ending, and I don't know, I think everybody was told that, it wasn't, forgiveness, it was just a deferral. And now each lender is a little bit different, but my understanding is that they're going to require people to amortize the 6 months deferral over the remainder of their term. So they're going to have to make higher payments in order to make that up, with both the principal payments they missed, the interest payments they missed, and the interest on the interest as well. So there was no free lunch in that. And in fact, the average, I read that the average was sort of like $200 a month more now that they have to make up for those missed payments, which, there's a lot of people that are right on the edge. That's going to be difficult for them.
Well, here the car market has been picking up. Where do you think the money or credit for these purchases is coming from?
Yeah, it's interesting about car. There's one publicly traded company in Canada called Auto Canada that was really struggling. In fact, in February or March, they breached their loan covenants, and then they were unable to file their annual financial statements within the period. But the stock got down to about $4, and then it just surged right up to $18. As they said, it wasn't new car sales, but it was used car sales that they were having a big resurgence in. And things have kind of quieted down a little bit lately, but on the other side of that coin, the average selling price for new cars and used cars has been dropping. So I'm not quite sure. I certainly, obviously, some people are afraid to go on public transit, and they feel like they need a car. So there's been a lot of people that are switching from various sort of things that they don't want to do now with COVID, that feel they want to have their own individual car. The other thing, too, of course, is people are not traveling on planes as much, and trains, I guess. And so they might be using the automobile to go on vacation in the summer, that sort of thing. So maybe the individual car will make a resurgence, but certainly, without with the changes made to the government programs, plus the really there's really been a lack of a full rebound in employment since the worst of this recession. There has been a rebound, but an awful lot of people have not got their jobs back yet. So that will be difficult for car sales.
We'll have more with Hilliard MacBeth when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, we're hearing rumblings of Marxism, socialism, communism growing in Canada. Is there any truth to this? And what could it mean for real estate and the economy?
Well, I haven't heard those, but I'll guess what I think is behind it. So we had a finance minister named Bill Morneau up until recently, and he was a successful businessman on this family company, huge success, a very big company, and so he was well connected with the Toronto business community. And there was a change made in September, and he was out, and Chrystia Freeland was brought in. Well, Chrystia Freeland is considered to be much more center left, I guess, or outright left wing in terms of her views. And then shortly after that, they announced the changes to the CERB program, and of course we'd already covered how the changes are going to happen, but it's an extension of most of the support. And then at the same time, there was talk of what they call universal basic income, and this is where people would get a check, regardless of whether they're working or not working, whatever. Just everybody gets a check, whatever. It looks like $500 a month seems to be the number, and some would argue perhaps that this $500 a month payment is the precursor to universal basic income, and some people would call that socialism. So maybe that's where it's coming from. But the last time we had anything as serious, just one more backup one step, this recession is much, much worse than any of the recessions since 1945. So the worst recession since 1945, prior to this one, was 1981-82. From top to bottom, GDP dropped by about 6%. So if it was at 100 index level, it dropped to 94, and then it took a couple of years to get back up to 100 again. And that was the worst recession. And that was tons of companies went bankrupt, and most of the listeners probably wouldn't recognize the names, so I won't go through it. But big companies, big oil companies, big real estate companies, big banks, lots of situations. So the current one today, and it's only 7 months old, is went for, if on the same basis, index of 100, went all the way down to 82. So it went down 18%, and now it's back to about 92. So now it's an 8% decline. And so much, much worse than the 1981-82 recession. So in that case, we're going to see some stuff that we've never seen before. And so you'd have to start talking about the 1930s to try and make a comparison. Obviously, it's not as bad as the 1930s, but it's much worse than the recession since the 1930s. So what happened in the 1930s was people talked about communism, Marxism, socialism. There were so many people out of work that they were willing to try anything. And we might be entering, assuming that this recession lasts, the normal severe recession lasts about 2 years. And then it takes another significant period to get back to the level it was at before the recession started. So we're looking at 2022, 2023, 2024. The longer it doesn't come back fully, the more these radical theories become talked about and promoted. And if people are sitting at home wondering why they're sitting at home, they don't have any income, they got lots of time to go on the internet and check out, well, what is Marxism, what is socialism. So and I think one of the problems is, and I don't think the government had any choice on this, but when the government starts making the payments that they have, they start to create expectations that the payments will continue. And that's where you get into a situation where the government has a really tough time going to people and say, oh, you know what, we're going to go back to this free market capitalism where it's, live or die, it's kill or be killed, and it's it's going to be difficult. It really is. And so I expect more of this kind of talk will continue to happen.
If Marxism, socialism, communism does take power in Canada, would you stay or move to another country, and what country would you move to?
Well, no, I'm not moving. I've been around too long. Maybe, you'd have to say, well, which countries? It's interesting. I phoned up a friend of mine from work. We worked together 30 years ago as stockbrokers in the original days, and he sold his company. He actually went out and created his own company and sold it to a big bank, so he did very well financially. And I asked him if he's going to stay in Canada or not, and he said, oh, I have to stay here. The grandchildren, my wife won't let me leave. They're going to be close to the grandchildren. And I asked that question. I said, well, where would you go if you could move anywhere? He said, well, I kind of like New Zealand, right? So New Zealand, of course, is a beautiful country with almost no people, more sheep than people, but the real estate prices are even higher there than they are in Canada. So that would be the problem. The one place that, if you look just at real estate prices, and the food is great too, is Italy. So the real estate prices for 300,000 euros, which would be 600,000 Canadian or something, you could get an absolute gorgeous place in Italy, similar to some mansion in Point Grey in Vancouver, and with lots more land than you'd get in Vancouver. And so I've always wondered about that in terms of that would be the climate's better, the food is better, the living is easy, but no, I don't know. I don't expect to move anywhere.
BC is in the middle of a provincial election. Is one party likely to be better for real estate than the other? Well,
one of the things that happened when the Liberals lost to the NDP, which didn't seem like it was that long ago, the big thing, one of the big issues in Vancouver was the money laundering, the foreign money coming in, pushing real estate prices up, and several taxes have been brought in that sort of caused the speculation to damp down. And then, of course, the CRA made some moves that made it more difficult for people to launder money, although there could be a lot more could be done on that front. So I think it doesn't depend so much on now David Eby, the new, I think he's the finance minister in the NDP government, was really talking
Attorney General.
He's Attorney General, thank you. He's talking a lot about cracking down on money laundering, but he also wanted the federal government, because it's really a federal, criminal code is federal, international money laundering is federal, not provincial. He was really trying hard to get the federal government to get involved in investigation and prosecutions. And so far as I know, nothing's happened. So that would be the big thing, I think, that would have a bigger impact on there were estimates, the peak year was 2017. I've seen estimates anywhere from $5 billion to $15 billion that came into Vancouver just in that 1 year alone. And most of it went into high-end houses in West Van and stuff like that. But a lot of it went into high-priced condos and stuff. There never has been a full investigation on that, and really there have to be a lot of people involved. You can't get, there was a video. I don't know if you saw it or your listeners saw it, but there was a video of some guy going in and with a hockey bag full of cash into a casino, and that sort of gave the impression that that's what you don't launder $5 billion or $10 billion in hockey bags of cash. It's just not possible. You'd have to have trainloads of cash to get that much. So obviously it's gone through somebody's bank account, through somebody's trust account, the law firm or whatever. And I think it would be a pretty easy investigation to find out what happened. And it's probably still happening, although not on the scale it was. And would the Liberal government or the NDP government more likely to do it? I don't know. I thought the NDP government was going to do it. Certainly David Eby was talking about it, but I haven't seen it yet.
The BC Liberals are proposing in the election to mostly eliminate the provincial sales tax for 1 year if they form the government. Is this a good way to stimulate the crippled economy?
I don't know that it would make that much difference. It's certainly Albertans that go to BC or move to BC always talk about how much more expensive it is because in Alberta we don't have a sales tax. But it certainly hasn't helped the Alberta economy. I think we mentioned earlier that 21% of all the mortgages in Alberta are on deferral, and only something like 12% on average across the rest of Canada are on deferral. So with no sales tax, it doesn't mean if you can't afford to pay your mortgage, you can't afford to pay your mortgage. It doesn't make any difference if there's a sales tax or not. I don't think that would be a big factor. I think certainly the federal payments that are coming out are big. And, I think there's talk now about an infrastructure, bank that the federal government created a couple of years ago that hasn't really done anything yet. And if somebody could get some bold thinking going in terms of, some projects, of the scale that people like the Chinese do quite often in China, then, that might make a difference. But a sales tax, I don't really think it would make that much difference.
There are rumblings that Prime Minister Trudeau is likely to target real estate with taxes to pay for his spending spree. Your thoughts?
Well, first of all, taxes don't pay for spending sprees. So the government is like a home buyer with a mortgage and a house purchase. When the bank issues that mortgage, that money is created. That money did not exist before the house purchase was made. The bank creates the money, $300,000 all of a sudden appears in your bank account, and then it goes directly to purchase that home. That's brand new money that's been created by the chartered bank. And the same with the government spending. The government can spend the money first and then worry about the taxation later. So I don't think they would be doing, they're running a $300 billion deficit. They're not going to collect anything like $300 billion, on a tax on real estate speculation. So I think they would do it for other reasons. If they did it, they would do it from the point of view of fairness and equity. And I think there might be a good argument for that in the sense that tons of people pay income tax on their salaries and their wages. And if a business makes profits, it has to pay business tax, profit tax, sales tax, all kinds of taxes. And yet the real estate speculator, especially if they cheat a little bit on the tax-free status of homeowner occupied real estate, they can go tax-free for years. And I've heard lots of anecdotal stories of people that have done it for 30, 40 years. So why shouldn't they be taxed on those gains in real estate? So I would think the proper way to do it, to be fair, the small business exemption, I think it's about $850,000. So you get lifetime, and most people never take advantage of it because most people don't own a small business. If you sell that small business, the tax-free gain is $850,000 the max, and then above that you're taxed. So that would make sense. Give everybody a one-time lifetime exemption of $800,000 or something like that, some number like that, and 99% of people would never use it up. Maybe some people in Vancouver and Toronto would be able to use it. But at least it would be fair between other things. And then above that, if you get people that are speculating in real estate, they should pay taxes just like they do on their gains in the stock market or other areas.
We hear there's a trend of people moving from the cities to the suburbs and to small towns. Do you think people could regret those moves as things get back to normal?
Well, yes. I think I certainly don't like the idea of living in a high-rise city tower like downtown Toronto has become. I certainly myself like to live in a home with a yard and that sort of thing. But going into a small town, it's a different lifestyle. And as people get older, things like doctor's appointments and proximity to grandchildren and that sort of thing become really important. And so one of the things people don't realize about living outside of the big city is the amount of time they spend in their automobiles. So they they obviously would save money moving from the city to the rural areas because real estate is cheaper. At least it was until this latest boomlet is on. But the cost of car, first of all, everybody has to have a car. Secondly, you put way more kilometers on it than you used to. And so you find out that you have to replace the car every 2 or 3 years. And the insurance goes up, the gas goes up, everything goes up. So, and then spending all that time in your car is not that much fun. So, now with work from home, of course, people might not have to spend that much time in the car, but even just things like groceries and other appointments, you end up driving more than you would. But I know, a lot of people love it. It would be a difficult transition for people that have been used to the convenience of being in a city. Is there a coffee shop in a small town on the corner? I guess there probably might be. Is it a Starbucks? Definitely not. It's not going to be a Starbucks. So, and then the other thing too to think about a little bit is, and we've noticed this with Albertans, an awful lot of the small towns in BC, away from Vancouver, in the central part of BC and the eastern part of BC, are inundated with Albertans, and especially with this COVID recession. And there's some resentment. So local people find that all these new people coming in, they distort things a little bit, and there's some bitterness or at least some irritability happening. So that's something to think about too. Is so I don't know, but the big change, of course, is work from home, right? And my sense of work from home is, and I'm involved in it myself, is I think it's here to stay, and it's actually much simpler than I thought it was going to be. It's sort of been an option for me for many years, and I've never really taken it up because I didn't really understand it fully. But maybe until the technology was available, it just wasn't a possibility. But now that the technology is available and the incentives there because of COVID, then an awful lot of people are doing it. Every business is going to have to adjust to work from home.
A friend of mine's father who lived in rural Alberta on a farm used to go for long walks on country roads, but he kept being stopped by neighbors who said, "Is everything okay? Did your car break down?" So he had to go into town to go for his walks because he kept getting interrupted out in the countryside.
It's interesting you mentioned that because that's one of the things I noticed, like on Vancouver Island. Some of the people that I know have moved to Vancouver Island, that walking on some of those roads can be quite dangerous because there's very little shoulder there. And if you happen to be walking there when the ferry schedule, there could be quite a few cars whizzing by that are late for the ferry. So you got to be careful. You have to jump into a ditch every once in a while to avoid getting run over.
We are hearing the recession word and the depression word being used in the same sentence as Canada. Your thoughts? Well,
the definition of a recession is when your neighbor loses his job, and the definition of a depression is when you lose your job. So, there's no technical difference. This is a very severe recession, and we have never experienced anything like this before. None of us that are alive today. I talk to people about this all the time, and I hear from acquaintances that, "Oh yeah, we've been through this before." And, the fact of the matter is we have not been through this before. We've never been through anything. I ran through the numbers a minute ago. I won't repeat them, but the severity of this is off the scale. There's one number I didn't mention, which was unemployment. So over the years, they've changed how unemployment is measured. And one of the things they stopped recording was people who had given up looking for a job. So believe it or not, when they say the unemployment rate is it's about 10% in Canada, and it's about 8% in the U.S. That doesn't include the people that have become so discouraged looking for a job that they've given up looking. Because to be included in that 10%, you have to still be looking for a job. Well, right now it's not a great time to look for a job. So if you include those people into the thing, the numbers are much higher. In Canada, it'd be 13%, and in the U.S. probably 10 or 11%. And these are much higher numbers than we've had in any recent recession. So it's not depression. The only real depression that we measure is the 1930s, And we weren't so crazy about keeping statistics back then like we are now, so we don't really know exactly how bad it got, but I've seen numbers like 20%, right? So we're not there. But the thing is, though, it didn't last forever in the 1930s. The worst of it was 1932, 1933, and by 1937 things were starting to get quite a bit better. So 3 or 4 years, and but it has a permanent impact on people's psychological approach to life. The how they view their job and how they view their finances and how they view, especially in my opinion, is how they view debt. If this thing lasts for 2 or 3 years, people that have a lot of debt are going to have to come to terms with that, and they'll probably have a bad outcome. So that'll be a permanent change. And our whole society, a lot of the consumer spending has been based on taking on more and more debt every year. So will it be called a depression? Probably not. They'll probably come up with a new word for it, but it's serious, that's for sure.
When are we likely to see a federal budget in Canada, and do you think it will be draconian in nature?
Well, for sure it won't be draconian. So there's no draconian budget coming. I think they have discovered that, as I covered a minute ago, that the government can create new money by spending it into the economy, and they don't have to raise taxes first to get it. But there's a lot of pressure from a lot of feeling among wealthier Canadians that eventually they will have to raise taxes to balance the budget. The problem with that is that if they tried to make a draconian budget, that would basically mean spending less and taxing more. That would be a simple explanation of draconian. That would create a surplus in the government sector, and that means you have to have a deficit in the private sector. So the private sector would have to go deeper into debt, while the government sector was trying to get out of debt. And in the private sector, that includes probably the cities and the provinces as well. And so it would be terrible for the private sector if the government tried to do a draconian budget. It would suck money out of the. It depends on what the government did with it, but if they suck money out of the private sector to maybe make their budget balance look better, they would be starving the private sector of money, and the private sector really needs that money right now to pay down its debt. This is what happened in Japan. The private sector decided to pay down its debt, and they've been doing it for 30 years. And that's what's caused the economy to be very, very weak in Japan for so long. So there are some proposals for this to get out of this, and one of the big ones is a debt jubilee, where you just basically wipe out all the debts and push the reset button like you would on your iPhone and start over again. But certainly a draconian budget by the government wouldn't. First of all, it's not going to happen, and secondly, if it did happen, it would be devastating for the economy.
With all the upheaval and uncertainty in Canada, could some real estate markets drop like Florida, Arizona, and Nevada did during the Great Recession?
Oh, absolutely, or worse. I mean, our bubble today is much worse than the bubbles that occurred in Florida, Nevada, and Arizona, California. When you look at the charts, there's no comparison. The same with Japan. Japan had a bubble in 1989. You look at the chart for Japan versus today in Canada, our bubble is 3 or 4 times bigger than their bubble was. And but their bubble was big enough to require that house prices had to decline for 30 years and by 50% or more. So absolutely, the prices could come down a lot. And in fact, it's not clear what would help, what would be a sufficient factor to allow them to continue to stay where they are. Because if the debt creation isn't there to support the prices, and the incomes aren't there to support the prices, and the foreign money laundering isn't coming in to the extent that it was before to support the prices, then prices have to fall.
As Canada hits hard economic times, are foreign buyers likely to buy more real estate or sell the real estate they have?
Well, it's hard to know. Like there was a story, I think it was probably about a year ago. There's a condo in Toronto. I think it's called the Shangri-La. I know there's one in Vancouver, but I think there's also one in Toronto. It's a trouble project. And there was an investigation done by, I think, one of the newspapers, maybe the Globe and Mail, and they said that there's been only a few sales, like a brand new building everybody buys, $5 billion to buy a penthouse or whatever. And they discovered that there had been several sales, and they had been at a substantial discount to the original price. So people had actually lost money, and then there was a big uproar because nobody's, you can't lose money in Toronto condos. It's not possible. But these people were buying at $5 million and selling at $4.5 million or something like that. And of course, what the article didn't mention was if the money that came in, the $5 million that came in to buy that thing, is now laundered and is clean, because now it's, where did you get that money? Well, I sold my condo in Shangri-La and I got $4.5 million out, and now it's gone from dirty money to clean money. Well, they don't care. In fact, a 20% haircut is normal on money laundering, right? So they don't care if they sell. So to the extent that Canada is a place where that's easy to do, foreign money may continue to come in from all kinds of different countries. It isn't just China. There's other countries where people need to get their money out. And real estate's a very convenient method of doing it. And so if the economy is bad in Canada and it's good everywhere else, obviously money will leave Canada. There's no question about that. If the economy is bad in Canada, it's bad in the United States and bad everywhere else, I don't know that it's going to be much different. I don't think it'll be a big factor. The one big thing that could cause real estate to be supported by foreign money coming in, and it would be people moving to Canada, would be climate change. So in parts of California and other parts of the U.S., in California it's forest fires. In other parts of the U.S. it's just extreme heat now that's causing it to become very difficult to live there in the summer months anyway. I don't think people move that easily. I think they talk about moving, but they don't actually move. But if it became unbearable for some reason, or if the agricultural sector could not produce a crop anymore because of extreme heat, then you might find some parts of Canada getting people moving there where it's cooler. The parts of the southern parts of Canada might be too hot as well, like southern Saskatchewan, where they produce a lot of wheat, might already be too hot, or in the future at some point might be too hot. But there's other parts like northern Alberta where there's lots of fertile soil, but the growing season was too short, so they weren't able to get the crop fully developed before the frost came. So as the climate warms, if it continues to warm, then we might get an influx of settlers coming in that want to take advantage of that. So something like that would be, very long term, I think. But who knows? It might happen faster than we think.
Could we see anything resembling hyperinflation in Canada?
So hyperinflation. So the modern monetary theory people talk about that quite a bit. So the premise of modern monetary theory is that the government can create money, as we discussed, by just spending it into the economy and then not taxing it back out. So they create a big deficit. This is what the government's doing right now. And the limitation that the modern monetary theory people point out is that if you put all that money into the economy and but there aren't any new productive companies to produce goods or provide services, then what will happen is the price of all the goods and services have to rise to match the amount of money that's being put into the economy. And it could happen. And of course the solution to that, as they point out, is to just tax that money back. So you spend it into the economy. Then when you see inflation starting to go too hot, then you tax it back, and that cools everything off. Now politically, sometimes it's hard for politicians to raise taxes. So that's where you can get hyperinflation happening. But the other possibility for any country like Canada is, so every country that's a currency issuer, like Canada is the Canadian dollars and the US dollar, and they have a real advantage because they can just issue currency, more and more currency to pay for what they want to do. But if people start to lose confidence in that currency, then that's where it becomes a problem, like the Argentinian situation. And and that's where you get hyperinflation. But for the moment, that's not a risk. Right now, the bigger risk is deflation because of the unemployment and the recession, and it's more likely that people will default on their debts. And as we know, when people default on their debts, whether it's for a house or a car or whatever, usually the lender puts that asset on the market, and they always get a lower price. They always, everybody knows that houses in foreclosure go down. That's what happened in Nevada and Las Vegas, and prices went down 50, 60, 70%. As soon as you see foreclosure, the prices go down. So, and even the method of selling that property is different in foreclosure. So that's more likely to be the problem with deflation. But longer term, it's a possibility for sure. If the government mismanages it, especially all this new money that's being created and spent into the economy, and they don't react quickly enough when the tide turns, then you definitely could get hyperinflation back.
Do you think the stock markets are pricing in a win by President Trump or Joe Biden?
It's funny you should ask that. I was thinking about that today because of the announcement Thursday night that Trump had tested positive for COVID-19. The stock market went down less than 1%. So I'm not sure there's all kinds of possibilities. Certainly Biden's way ahead in the polls. The spread on most of these polls is like 9%, although in some of the swing states, the hotly contested states, the margin is less. But in the states that normally go Republican, Trump and Biden are running pretty well even. So Biden doesn't need much in the way of these swing states. Trump basically needs to win most of them, and he's behind in most of them. So it looks like Biden's going to win. And in that case, you think that if it was such a terrible thing for Biden to win, because it's looked like this for several months now, Trump had a good chance, although he was in trouble because he was only at 43% approval rate. But he still had a chance when the economy was strong, like it was in February, and there was no COVID. Now he's got a weak economy, he's got COVID. His chances are really poor. And no president has won a second term with only a 43% approval rating. And his approval rating might have dropped since that 43% came out a few months ago. So the stock market's held up quite well. I mean, the high on the S&P 500 was 3,600. It's now 3,300, even after today's news about COVID-19. So I guess the stock market isn't that worried about Joe Biden's presidency, or the stock market doesn't believe that Joe Biden's going to win. I don't know. But so I think the answer to your question is I don't think the stock market really cares. Whoever wins, and they seem to be willing to pay extremely high prices for the leading stocks, the so-called FANG stocks, and they probably don't care who's president.
President Trump just approved funding for Alaska to Alberta rail. What are the benefits of this likely to be?
Well, that's the most ridiculous project ever. I've read the story about it, and for a few years I used to work in that industry. In university, I had the summer job and everything, and then after university, I worked a couple of years, and it doesn't make any sense. The whole thing doesn't make any sense. I mean, it's a crazy idea, and railways are not a good way to ship oil. Pipelines are the better way to ship oil, but shipping oil. So what I read said Fort McMurray to Anchorage, Alaska, so to get to the seaport in Anchorage. And of course, Fort McMurray is in northern Alberta, where the oil sands deposits are. But it doesn't make any sense, because the problem is the railway needs an incredible amount of maintenance. The railway company has to maintain the road bed, and a lot of that area is kind of like a swamp. And then there's the cold weather in the winter. It's just a nightmare. So ask the Russians about their railway going across Siberia. But so I think the thing is a really weird story. And you look at the history of some of the people involved, and they haven't had a really good track record of success in the past. So I don't put any credence on that report. I don't know what the reason that Trump had to approve the permit, because it goes across the Canada U.S. border. But other than that, I don't think it doesn't mean that they've got a plan or any financing or any sound business plan or anything like that. It's just one of those things, I think.
How's the oil patch doing?
Well, things are not great, and they haven't been great for 6 years now at least, and they're not getting any better. Like it's just a one blow after another. So there's a surplus oil in the world. The OPEC seems to be unwilling to cut their production in order to prop the price up. So to give you some idea, the WTI's as of Friday was down to $37, dropped from 40 to 37. Most projects in the world need at least $50 oil to break even, including Northern Alberta. And but it's even worse than that because the Western Canadian price for oil is down in the 20s. So there's quite a discount there. And so it's very difficult. Some of the big companies like Suncor just announced they're laying off 2,000 people, and they're the biggest in Canada by far. They had a big operation in the oil sands, and then they have they bought Petro-Canada years ago, so they have assets all over. But no, it's not good. And Calgary, the office towers are empty down there, and of course everybody's staying away from office towers now. But it isn't just COVID related. It's also just their jobs are not there in the office towers in Calgary anymore. So they've got something like a 30% vacancy rate in the office towers in Calgary pre-COVID, and the COVID isn't making it any better, obviously. So yeah, it's a tough situation. And the Premier, Jason Kenney, who got voted in a couple of years ago, I think, after the NDP Rachel Notley got defeated, promised a lot of things like access to markets and new business diversification. But really, as far as I can tell, not very little of that has happened. So it's a very, very tough time in Alberta. And that's like that, that statistic. The 21% of mortgages in Alberta that are on deferral is almost double the average for all of Canada. So it tells you that things are people are really struggling.
U.S. dollar versus Canadian dollar going forward. Your thoughts?
That's a really good question. I just had that question recently from a client, and I've been expecting the Canadian dollar to go to 65 cents for quite a while, and obviously I've been wrong. People for a long time have had the feeling that the Canadian dollar, and of course the Canadian government had a AAA credit rating until recently. One of the rating agencies dropped it from AAA to AA plus. But that didn't seem to impact the Canadian dollar much at all. So, the problems for Canada are, it's a very much an exporting country, and oil exports and automobile exports are the two biggest exports. Both of those are under pressure. A glut of oil on the one hand, and basically transition to electric cars on the other hand, which Canada is not involved in. So far, there is a proposal for one plant in Ontario to be converted to produce electric cars, but that's just a proposal. And of course, they're asking for billions of dollars in government money to be able to do that. So it's a very tough situation, but Canada still has a reputation as being a bit of a safe haven. And the Canadian banks, the share prices have not kept up with the market recently, but they haven't dropped precipitously either. So, people still see it as maybe a place to park money or something like that. But no, it's going to be tough. I think the 75 cents will eventually be something in the 60s at some point, when people, kind of become more aware of some of the challenges that Canada faces.
Could we have seen the tops in gold and silver for 2020?
Yeah, maybe for 2020, but I think it's around 1900, and I think it's at 2000 roughly for the gold price of gold. When you take the $850 in 1980 as a peak and convert it with inflation, I think the number is $2,200 would be the all-time high. And, gold was $20 in 1910 or something like that, $35 in 1935. So it's taking that $20 in 1910. So in 100 years, gold has gone up 100-fold in terms of the U.S. dollar. So that means the U.S. dollar in gold terms has lost 99% of its purchasing power. Here's a good way to look at it. Because really all the price of gold is the inverse of the value of the U.S. dollar, right? So the U.S. dollar has gone down 99% in 110 years. And so gold has kept its purchasing power better than the U.S. dollar, obviously. And with the amount of I started to say currency, that's not the right term. The amount of electronic deposits denominated in U.S. dollars being expanded dramatically every second, gold is most likely probably going to continue to be priced higher in U.S. dollars.
China has a significant influence on Canadian soil. Do you think this is likely to change as China has significant economic problems at home?
Well, everybody's, myself included, have sort of been wondering how much longer the Chinese economic miracle has continued. And of course, there's lots of questions about the accuracy of their numbers and GDP related and that sort of thing. But they do tend to pull these things off, and they've got a different system from us. The government is much more involved in making decisions as to where the money is invested. The government in China will direct the bank to invest in a project or to do certain things, lend money to this person or that company or whatever. And the Chinese government owns a significant shareholding in all of the big banks in China. The top 10 banks in the world, by asset size, 5 or 6 of them are Chinese. So they've done a phenomenal job. Whether you agree with the ideology or not, you have to recognize, I think, that they've done a phenomenal job in expanding their economy since 1980, when they opened it up to a kind of limited form of capitalism. And Japan did something similar after the Second World War, and it ran all the way to 1989. So is that about 40 years, roughly 30 or 40 years? So China's kept this going for 40 years. Of course, they're starting from a very, very depressed base, as was Japan in 1945 after their defeat in the war. So it won't run forever, but I would think that it probably would be smart to bet that it'll continue for a while longer. China has a 2025 goal called Made in China 2025, and that is that a lot of these things that they've been buying from other countries are going to be Chinese made and Chinese designed and Chinese manufactured. And the big knock on China is that they copy what everybody else does and they just do it cheaper. But if they start coming up with their own technology, their own for instance, artificial intelligence, they're trying to be the world leader in that area. So banning TikTok and banning Huawei and pushing back on all these advancements. Everybody loves Zoom. I've been using Zoom. It's Chinese as well. So I don't know. I think they've probably got more runway to go before they hit the wall. How is the electric vehicle industry doing? So the electric vehicle industry is very, very tiny, right? So it's Tesla just announced their quarterly sales. They're the most successful electric car company, I think, in the world. They 137,000 units, so that's times 4 is about 520,000 cars. World production used to be 100 million cars. I think it's down to about 80 million now. So, 1% of the world car sales would be 800,000. So Tesla soon will be at 800,000 and a million, and they're talking about 2 million fairly soon because they've now got 2 factories up and running, California and China. They've got another plant in Nevada that does mostly just batteries. And then they've got a new plant under construction in Texas, and they got another new plant under construction in Berlin, Germany. But when all of those plants are producing, and they say they're each producing similar to what California produces now, they'll be at 2 million. And Elon Musk, the CEO, said that he'd like to be at 20 million. And, sometime down the road, 10, 15 years or something, I forget the date. And everybody went, oh my God, that's way too much. But as he points out, there's 1 billion cars in the world. So at 20 million, as the cars roughly last 10 years on average, right? So every year there's 100 million replaced, and there's 1 billion total outstanding. So 20 million, if Tesla got to 20 million, it would only be 2%. So there's a huge amount of growth coming in electric cars, and I'm sure it'll come, but it's dependent on the biggest obstacle right now is Tesla can't be the only company doing it. There has to be other companies. There has to be American companies. There has to be like Volkswagen in Germany, Toyota in Japan, General Motors, whatever. They've all make some form of electric car, but they just haven't gotten. They're too busy with the old technology, the internal combustion engine, to get really serious about it. And to get the number of car sales up to 5 or 6 million a year, which is still only be 5% of the total production. It's going to take all of them to be involved. Tesla can't do it alone. By the way, China is the number one leader in electric car vehicle sales. I think they're up to about 4 million or something like that. But that includes a whole bunch of other vehicles and hybrids and stuff. So China's way ahead of everybody else in that category as well.
What sectors are you currently watching?
Well, we're watching very closely on the positive side, we're watching very closely the renewable energy, whether it be electric cars, wind turbines, solar panels. We don't have investments in all of that right now, but we have invested in some of them, and they've done phenomenally well, which is great. I wish we had more. On the negative side, we're very concerned about banks, and so one of the issues with a recession is normally what happens is you get a really big bounce at the end of the recession coming out of the other side with what they call value investing. And the biggest segment in value investing is the financial services, mostly banks. And of course what happens then is everybody that's been trying to pay down their debts, eventually the economy starts to recover, they get rehired at their job, and the first thing they do, they go out and get a loan and buy a car or a house or something. So that's been the traditional cycle. But this time it's hard to say what's going to happen. So certainly you'd want to, in my opinion, you want to avoid the value stocks, especially the financial sector, because we don't know for sure how bad this is going to get. We don't know how much deflation we're going to get. And that's when deflation happens, there's going to be defaults on bank loans. And then I'm not sure that coming out the other side that growth through housing and cars and debt is going to be the driver that it used to be. It might be a huge investment in renewable energy, which a lot of the countries in the world are talking about. Even Canada just yesterday announced a big technology infrastructure investment into clean energy. So the U.S., if Biden wins, will do something similar, and Europe has already done something, and China, of course, is already moving ahead very quickly. So that would be the area to look at.
Do you have any investing tips for people in these volatile times?
Well, we're in a recession. The stock market is expensive when you look at the U.S. stock market, especially with the valuations. So it'd be a great time to have some dry powder, as the saying goes. And it's not a time to be aggressive. As Warren Buffett says, be cautious when everybody else is greedy, and be greedy when everybody else is cautious. So people aren't yet expressing the degree of caution or fear that I would like to see in a recession like this. When you see that fear, of course, the problem is we'll be gripped up in the fear as well, so it'd be hard for us to act. But that is the best time to get aggressive in the stock market, when you start to see people panicking and running away from the stock market. Well, we're not close to that yet. It can happen very quickly. It can happen in a few months, but it'll probably take at some point later in the recession for those bargains to appear.
Where can people buy the latest second edition of your book, When the Bubble Burst, Surviving the Canadian Real Estate Crash?
All the major bookstores have it, and online with the Amazons and the other, and then also with the e-readers like Kindle and Kobo and that sort of thing. So available everywhere.
Hilliard, thank you so much for being on This Week in Money.
Wonderful to be with you again.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodGroup.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Ackerman, and Hilliard MacBeth. And thank you for listening. If you have any questions for our guests or the show, you can send them to info@HowStreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Thanks, Jim.
Larry, any new news from American Manganese this week?
Well, aside from reducing the price of the private placement we're doing, which I was forced to do as we were driven down, and by other forces which I'll discuss here later on. But in order to get the money, I felt that it would be fair to reduce the price down from 24 to 20 cents, and we're moving ahead with that. We're just waiting for exchange approval, and we can move on. And the other release, which was obviously a very positive release, in which Trump has manifested a goal for domestic mining and critical mineral supply chains. Now, this is a really important release, and perhaps judging by the fact that there's so much selling going on in the stock, it must have been bad. But I'm just saying that tongue-in-cheek, because the thing that you should really look at is more funding will be available to help mining projects. And that's exactly what the U.S. will have to do with some of their critical metals, is assist in the pricing, so that the companies that are doing it can make a profit or raise the money to, with the help of the U.S. government, to move a project ahead. And we fit in that category. I mean, manganese has been talked about a lot, and we have a lot of manganese at Artillery Peak, and we have a patented process to actually treat these low-grade ores. We've taken that process to the point of where it was a actual pre-feasibility study that the price of it was a race to the bottom, you might say. When they came out with first time they notified the banks that they would be getting rid of the uptick rule in February of 2011, it was a race to the bottom, whether the stocks were going to who was going to crater first, and manganese and the stuff that we were putting out on our pre-feasibility study cratered about the same time, so that was put on the shelf. But with assistance, the U.S. has really got to do something about having manganese within their domestically for moving everything ahead, whether it's batteries, whether it's steel production. You can't make manganese without steel, and if you don't have steel, the world stops. These are all great things, and we also had a mention in Forbes, which again must have been perceived by the investors out there as negative, because we haven't really gone up on all this. We've traded well over 1 million shares in the U.S. and Canada, and here we are, up a penny and a half, and it's staggering to believe that wow, that was not perceived as positive. And in that vein, I'd like to move forward, because we've been getting a lot of criticism on the bull boards as the volume increases in the U.S. and Canada, and I'll address that in a moment.
the negativity on the board is astounding. First, let's talk about my age. Well, my age is what it is, and actually, I'm the guy that carried this whole company on his back for 5 years in order to make my shareholders whole again, or partially whole again, and the stock jumped 18 times when we got involved in the battery industry. At the same time, the predators that were, if you can believe it or not, they must have been trying to drive the company into oblivion. And I do know who one of them is, and I know that he probably lost $500,000 on this little escapade. But and I think he's a key player in the predatory trading that's going on now. So that's the first time I've said I've got a pretty good inkling of who the one of the ringleaders is. But the whole matter is that why would you basically short a stock at 2 cents? Because covering the rise in that stock when we talked about our proof of concept being positive was a large part due to short covering. And short covering cost them millions of dollars across the board. And so, yeah, they do hate my guts. And, and I hope to do this to them again. So, predator trading, which I've talked a lot about, more so than Save Canadian Mining has broke a lot of people. A lot of people have lost billions of dollars over the last few years trading on the junior stocks and the major Toronto Stock Exchange. And it's still going on today. I mean, it's not investigated by the regulatory authorities or by IROC. It's, they only investigate if your stock goes up 20%. So it's a crime to have your stock go up. And it's not a crime to steal all the shareholders' money. So on that vein, they talk about what we're doing here, and I even know some of the people that talk about my age and I should step down and all that. That's the sort of thing that goes on every time. And the last time it went on, the board boosted me and Mike off the board, and all the shareholders lost all their money. At one time it had a $300 million value. So, and they lost it all. So, is that what they want here? Of course, that's what the predators want. They want to see it driven into oblivion. But let's just talk about what's going on. I've been asked to address the fact that we haven't put out a press release on what's happening at the pilot plant for a bit because work is ongoing. And we hope to have a press release on that very soon. Nothing negative. We have put out nothing negative. So the company shouldn't be under the attacks that it's on. We've done 52 podcasts with you a year, Jim. We have 32 press releases out this year alone so far. It'll probably be about 40. 40 third-party valuations and discussions with some respectable papers out there. The most recent being Forbes. And we've traded roughly 140 million shares between the two exchanges each year, which shows there's a lot of liquidity, but half of that is predator trading. And if you look at the last couple of weeks or 3 weeks, you'll see that ever since we announced the private placement, that the trading in the Canadian market and the U.S. market is almost identical. Today it is identical. And that is, basically an arbitrage trade where they can sell or buy stock in the U.S. at fabricated prices between themselves and then sell it on the Canadian exchange, driving the price down. Now, anybody that thinks I'm crazy, they just have to look at the facts of the whole matter. I just gave you our agenda, what we've done, and it's frustrating to me to see the stock at this rate as it is anyone else. I'm heavily invested in this stock, and I've got no reason to hold it down like the bull boards. And my health is fine, and also, my age just gives me more wisdom. I've never come out and directly attacked the predator traders, but I think it's time everybody realized just how they operate, and it's time that somebody knew that I know who he is, and we go from there. So, So, looking up stock today, 20.5 cents, 583,000 on the venture exchange, 529,000 in the U.S. So, when you think about going on the bull boards, listening to the BS that goes on there, the bull boards and the CEO boards, maybe you should take a look at the market, the way it's trading. It's a hard job to just keep ahead of that. And, we've got a great crew in here. We've got people that are dedicated, people that are work hard. We have 4 employees for the most part. And, so our overhead is low. We're not sucking on let's be honest, the tit. And, we're not getting rich getting salaries in here. So, it's all they can talk about is my age. Well, it is what it is, and, I'm not going to apologize for that. There's nothing I can do about that. There is something I can do about predator trading, and, eventually somebody will come in and see a nice setup to bounce a stock, to higher levels by starting to buy up the stock and forcing the predators to cover. And because there is a lot of there's money to be made there, and somebody's going to recognize that. So other than that, Zarko did his podcast today, and that was well received and well delivered. And we hopefully can attach that to this podcast. We will be attaching other things to it. And I can tell you that again, I will repeat, that all of our releases have been positive, except where we're influenced by third parties, and that is to do with the private placements. And but other than that, the technology is solid, the work is solid. It's third party. We've spent millions of dollars on tens of millions of dollars actually on our manganese projects and this recycling project. And we plan to move this ahead, and basically anybody that has patience can recognize that we have a solution, and we have the transparency that nobody else has except for Redwood materials, and let's just keep plugging ahead day by day. Thanks, Jim.
Larry, for people new to American Manganese, what's the company all about?
The company's all about critical metals and, of course, our other gold and copper projects. But critical metals is where it got us today, and, coming up with a solution for a circular economy in recycling batteries. And that was a result of a solution that we divulged, that Temetco had made for us back in 2011-12, where we have a patented process for for low-grade ores. Now, anything you want to find out, I don't know why people don't go to the site and look at things. The fact of the matter is the bull boards and the CEO boards are negative, and, they have show their whole wrong picture on everything, and they put their whole purposes is to shake up the shareholders, get them to sell to assist in driving the stock down. And you can go to our website, AmericanManganeseInc.com, read the truth, and or you can phone me at 778-574-4444. Or email me at LREAUGH@AMYMN.com. Traded on the venture exchange under the symbol AMY. We're traded on the U.S. exchange under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM.
Larry, thank you very much for the update.
Okay, Jim.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 2nd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.